December 20th, 2025. Jake Paul stands in the ring, knocked out by Anthony Joshua in the 6th round. Social media erupts with scripted fight accusations and headlines about $92 million. Defenders and critics miss the bigger story. Every punch is a calculated capital raise. Jake isn't just fighting for spectacle. He is turning controversy into hundreds of millions for his secret tech empire. But why would someone worth 9 figures keep risking everything for more? The answer changes what you think you know about every fight, and it all starts here. The bell for round 6 had barely faded when Anthony Joshua's right hand found its mark. Jake Paul hit the canvas, eyes wide, crowd roaring. Within minutes, the knockout clip looped across every social platform, hashtags multiplying by the second. Deontay Wilder posted a single word, scripted, and the comment section detonated. Fans dissected slow-motion replays, searching for phantom signals, while others declared the fight the biggest circus in boxing history. Jake's team fired back, threatening defamation lawsuits and promising to expose anyone accusing them of a fix. But the real numbers drowned out the noise. $92 million guaranteed for Jake, with pay-per-view and Netflix bonuses rumored to push the total past $180 million. For most fighters, a purse like that means a one-way ticket to retirement. For Jake, it's just another headline. The spectacle draws in millions, but beneath the chaos, there is a pattern. Every controversy, every accusation, every viral moment, each one drives the next payday higher. While the world argues about authenticity, the money keeps moving, and the stakes only get bigger. Jake Paul's fight calendar reads less like a boxer's quest for legacy, and more like a blueprint for viral chaos. Since 2020, every opponent has been a headline generator. First a fellow YouTuber, easy to sell, easy to mock. Then a retired National Basketball Association player, Nate Robinson, whose knockout turned into a meme factory overnight. Next came former mixed martial arts champions Ben Askren and Tyron Woodley, fighters with big names, but past their prime. Anderson Silva, a legend at 47, Mike Tyson at 58. Even Tommy Fury, more reality television than ring-tested. Each matchup is a calculated risk, engineered for maximum attention, not maximum danger. The formula is simple: recognizable names, cross-sport clashes, and just enough controversy to light up every feed. The result is payouts in the $20 to $50 million range, fight after fight. But the real currency is not just cash. It is memes, trending hashtags, and weeks of debate. Every viral moment resets the clock, drawing in new fans and haters, and guaranteeing the next event will be even bigger. It is not about climbing boxing's ranks. It is about building a repeatable spectacle where every controversy becomes a marketing asset, and every payday a launchpad for something bigger. For most athletes, a $50 million payday, say, means new cars, mansions, maybe a private jet. The story usually ends with a headline purchase and a victory lap on social media. But for Jake Paul, the real play starts after the fight. Every time he steps into the ring, he is not just chasing a win, he is raising capital. Every knockout is a capital raise. Every weigh-in is a pitch meeting. The ring is not just a stage for violence. It is his initial public offering roadshow. While other fighters cash out for fleeting luxury, Jake takes his earnings and turns them into equity. He buys into startups, not supercars. He stacks stakes in companies with the potential to multiply his wealth far beyond any single purse. The cash from each fight compounds, moving from the chaos of the arena to the quiet power of private markets. That is the difference between a one-time check and generational wealth. Would you rather make $50 million once from a fight, or turn it into $500 million through investments? Drop your answer below. Hit subscribe. We are covering portfolios nobody else touches. Anti-fund began as a punchline in Silicon Valley circles. In 2021, Jake Paul and Jeffrey Wu announced their new venture capital fund, an influencer and a biohacker betting on the future of tech. The press rolled its eyes. To most, it looked like another celebrity side project, a place to park cash and chase headlines. But the numbers told a different story. Anti-fund was not built for vanity. It was engineered for scale. The fund's thesis was blunt. Startups live or die on capital and attention. Money is everywhere in venture, but distribution, real viral reach, is rare. Anti-fund promised both. Jake brought an audience north of 70 million followers. Wu brought a Silicon Valley resume, having founded HVMN and built a reputation for spotting breakout founders. Together, they offered something no traditional venture capital firm could: a direct pipeline from the world's biggest stages straight into the earliest days of tomorrow's unicorns. The first fund, Anti-Fund Y, closed at $30 million, oversubscribed. By December 2025, assets under management had crossed $65 million. This was not influencer play money. Institutional investors like Aquarian Holdings and Autolus Partners signed on. Mark Andreessen and Chris Dixon, two of the most powerful names in tech, wrote checks. The firm's focus was AI, robotics, defense, fintech, and consumer brands, sectors where attention is the difference between obscurity and dominance. Logan Paul joined as a general partner, adding another massive audience and a proven track record with brands like Prime. The pitch to founders was simple: raise capital, then launch with the kind of exposure that usually takes years to build. When Anti-Fund invested, a startup did not just get money. They got access to the same distribution engine that sold out pay-per-view events and turned products into cultural moments overnight. Jeffrey Wu described Jake as an avatar of the American dream. Not just a celebrity, but a builder who understands how to turn controversy into compounding returns. The fund's structure reflected that ethos. Early checks ranged from $100,000 to $500,000, targeting technical founders who needed a jolt of capital and a blast of attention. For breakout companies, Anti-Fund deployed $10 million or more, betting big when the data and the buzz lined up. The model worked. Anti-Fund's portfolio quickly filled with companies that would go on to headline tech news and raise at soaring valuations. But the real innovation was not just in the deals, it was in the way the fund used spectacle as leverage. Every viral moment, every trending hashtag, every fight night controversy became fuel for the next pitch meeting, the next allocation, the next wave of capital. Underneath the noise, Anti-Fund was quietly building a vehicle that could outcompete traditional venture capital firms, not by being louder, but by being everywhere, at once. Ramp sits at the top of Anti-Fund's portfolio, one of the fastest-growing fintech companies in the world. When Anti-Fund joined the cap table, Ramp's valuation was in the low billions. By late 2025, Ramp's headline valuation hit $32 billion. Even a modest early check, $500,000 to $1 million, translates to a paper stake worth $16 to $32 million. That is a 16 to 32-fold leap, all from a single startup. And that is just one slot on the list. Cognition, the AI rocket ship, tells a similar story. Anti-Fund entered during Cognition's Series B at a $2 billion valuation. Within 18 months, the company reached $10.2 billion. A $1 to $2 million entry ballooned to $5 to $10 million on paper, 5 times in under 2 years. These are not lottery tickets. They are the result of getting into the right deals at the right time, with enough capital to matter. Anduril, the defense tech juggernaut, operates on a different scale. Antifund wrote a growth stage check. Industry chatter puts it north of $10 million at an $8.5 billion valuation. By mid-2025, Anduril's mark reached $30.5 billion. That is a 3.6 times jump. If Antifund's allocation was even a sliver of a percent, that stake could already be worth over $36 million. Not a bad return for a single growth round. Chronosphere, the cloud observability company, is one of the few realized wins. Antifund backed it early. In 2024, Chronosphere was acquired for $3.35 billion. That is not just a mark on a spreadsheet. It is a cash return, proof that this approach can convert paper value into real dollars. Even if the exact payout is private, the exit validates the strategy. Get in early, ride the wave, and cash out when the market comes calling. Olipop, the functional soda brand, shows how consumer bets can multiply. Antifund invested during the Series B at a $200 million valuation. By February 2025, Olipop was raising at $1.85 billion. That is nearly a 10 times jump in enterprise value. A $500,000 stake could now be worth $2 to $4 million, depending on dilution and follow-ons. Stack up the portfolio: Ramp, Cognition, Anduril, Chronosphere, Olipop, and the sum of their latest valuations tops $70 billion. Antifund does not own them outright. The fund holds small slices, but those slices are cut from very large pies. Most funds spend decades chasing this kind of upside. Here, the fuel is spectacle. Each fight, each headline, each viral controversy becomes another chance to write a check that could multiply tenfold. It is not just about paper marks. Chronosphere's exit shows the model can turn hype into hard dollars. The rest of the portfolio, OpenAI, Polymarket, Flock Safety, Physical Intelligence, and more than 20 other startups, adds even more optionality. The numbers prove it. Every time Jake steps into the ring, he is not just risking a loss. He is buying a lottery ticket with far better ODDS than Vegas ever offered. While the internet argues about knockouts and memes, the real scoreboard is in the private markets. While you watched Jake Paul memes, he built a portfolio rivaling Stanford venture capital firms. If this surprises you, hit like. Comment, which investment shocked you most? Distribution is the lever that turns Jake Paul from a headline into a business operator. Most Valuable Promotions, his own fight promotion company, is not just a stage for his bouts, it is a profit engine. Jake earns as the main event, but also as the promoter, taking a cut of every ticket, every stream, every sponsorship. When he steps into the ring, he is not just fighting for a purse. He is launching a campaign that can move millions of eyes and millions of dollars wherever he points them. Betr, the sports betting startup he co-founded, rides that wave. Whenever Jake hypes a fight, Betr's app downloads spike. Industry estimates peg Betr's valuation in the hundreds of millions, with some reports putting it at $375 million. Whether or not that number is official, the company's growth is tied directly to Jake's ability to drive attention at scale. No traditional venture firm can offer that kind of instant customer acquisition. Then there is ZW, his men's care brand incubated inside Antifund. Jake and Logan Paul use their reach to turn product launches into events. When W dropped, it was not a slow build. One post and the brand was everywhere. Sold out in days. Trending on social. Press scrambling to cover the story. Industry chatter puts W's valuation near $150 million. But the real asset is the distribution. Millions of potential customers delivered overnight with zero ad spend. This is the value founders want. Not just cash, but a guaranteed audience. For consumer startups, It is a shortcut past years of grinding for attention. For Jake, every event is a demonstration of power, proof that he can turn controversy and spectacle into sales, users, and brand equity. That is why Antifund gets deal flow others cannot touch. Every payday comes with a cost, and in boxing that cost is measured in more than dollars. Medical research on chronic traumatic encephalopathy, CTE, draws a straight line from repeated blows to the head to long-term brain damage. Even a handful of professional fights increases the risk. Jake Paul may have avoided the years of punishment that break down career boxers, but every round is a roll of the dice with his own future. Neurologists warn that symptoms can surface years after the last punch: memory loss, depression, even early dementia. For someone who has already earned enough to walk away, the decision to keep fighting is not just about the next purse, it is about gambling with decades of health. There is more at stake than just the body. The Federal Trade Commission endorsement rules require Jake to disclose any financial ties when he promotes brands like Betr or W to his millions of followers. One missed disclosure can draw scrutiny, and as the lines blur between promotion and investment, the regulatory risk grows. So far, no major enforcement actions have landed, but the obligation is real, and so is the potential fallout if regulators decide to make an example out of a creator venture capitalist. Then there is the upside. If Antifund's portfolio delivers even modestly, the returns could dwarf anything Jake has earned in the ring. Model out a scenario: if half the portfolio exits at current valuations in the next 5 years, Jake's net worth could cross $1 billion. That projection assumes current marks hold, a reasonable exit environment, and that he keeps his carry and personal stakes intact. But every assumption is a variable, and every fight is another spin at multiplying or losing the capital he has put on the line. The stakes are not just about money, they are about legacy, risk, and the real cost of turning controversy into generational wealth. Floyd Mayweather bought Bugattis. Mike Tyson bought mansions. For decades, the boxing blueprint was simple: cash in, cash out, and let the world remember your knockouts or your bankruptcy. Jake Paul is writing a different script. Every time he laces up, the question is not just will he win, it is what is he building. The old guard measured greatness in belts and big-ticket toys. Jake measures it in equity, carry, and the size of his cap table. He is not chasing the ghosts of Ali or Tyson. He is chasing something you cannot hang in a trophy case, a portfolio that spins off returns long after the spotlight fades. The ring is just one stage. The real game is happening behind the scenes, where attention is currency, and every viral moment is a lever for the next deal. Every knockout is a capital raise. Every way in is a pitch. The ring is his IPO roadshow. That is not just a punchline, it is the playbook. So what is the legacy? Is Jake Paul a boxer who invests, or an investor who boxes? Is he risking his health for another payday? Or is every fight a calculated move to buy a seat at Silicon Valley's most exclusive tables? The answer might depend on which scoreboard you are watching. Drop your thoughts below. If this changed how you see the game, share it. Subscribe. The next story is just getting started. In today's creator economy, spectacle is not just entertainment, it is capital. As billion-dollar startups crave attention and money, Jake Paul turns controversy into compounding wealth. The real disruption is not in the ring. It is in how influence becomes leverage. Silicon Valley is watching. The next unicorn founder might launch from a boxing ring, not a boardroom. What would you build if millions watched your every move?